Hello traders, this video is about understanding the wave principle. Alright, in this video we will focus on the second Elliott wave. Alright, so we see, as I explained to you in the first video, the first Elliott wave came out of the consolidation zone. Now we understand, okay, the anatomy, okay, the physiology or the psychology of the first Elliott wave. We want to talk about the second wave. Alright. The second wave is the wave that will follow the first wave, is the first profit taking. So the smart money that we're buying during the consolidation periods, because we are talking about the uptrend in this case, will start taking some profit. So they see the price going up, breakout very bullishly. They are very happy. It's a euphoria. The first way is like a euphoria. They are so happy to see their investment bearing fruit straight away. Talking about the first fruits. All right, so they are happy. They want to take some profits. It's like the celebration. So you invest, for instance, you buy stock, you buy Apple stock, you buy Google stock, you buy Intel stock, you buy Hewlett Packard stock, and after a few days, you are in profit, probably more than 200% of your original investment. It's a euphoria. You are happy. Breakout price going up very, very fast. All right. The reason why the first area wave also is very bullish, because during a consolidation period, some aggressive traders and old-fashioned traders will place buy orders above the consolidation zone. So above the consolidation zone, we have a lot of buy orders littered here. If we have a lot of believers that are bullish, okay, they will place order above the consolidation zone. As the price start breaking above the consolidation zone, these orders will be filled up. So the price will run very fast. You see a volatile candle running fast to a certain degree. These are first, okay, investor or smart investors, okay, will take some profit. That first profit taking, that will form, okay, the second wave. Is the first profit taking, is the first harvest, okay, is a euphoria celebration of a successful investment, and the traders will take some profit that will form the second wave. As the second wave, the price rolling it down, the price looking for a better support level. Looking on your left hand side, as I said to you, the first wave will break resistance on the left hand side. As the price coming down, traders start watching the resistance on the left hand side. This one here, you see the top of this candle. Price rolling it down, you will see very often the first wave, the second wave is a corrective wave, can be a zigzag, which means formed of ABC or ABCDE or any other corrective pattern. Is not as volatile like the first wave, because it's a profit taking. During that period also, we may see a low volume, because now it's exposed. The bear that were in this trade were licking their wound. Bear trader that were selling here at the top of the consolidation loss. Some of them may move their profit, their stop loss, if they are using spread betting, to move their stop loss so they are not taken out. Okay, so as this is taking place, the smart investors start taking profits, and the price start rolling it down. As the price rolling it down, the price will acknowledge the resistance on the left hand side. So price come down first, we go to the first resistance level or the first and nearest support level. You see, or resistance level, you see here. It's rolling it down near the first and nearest support level, top of this look here. All right, so price will stop a bit. People think that that's it, and then some traders who are not patient, who do not care about where they should buy, whether they should buy the best place or not, they will start buying here. Price start going up a bit, traders think that it's going to go up, but no, there are more profit taking. These bulls that were in this trend are still taking profit, they haven't finished yet. So the price will come back down again more, a bit more. So you will see the second wave formed of A, B, C. Sometimes you may see A, B, C, D, E, or more complex double zigzag. So A, B, C, D, E, A, B, or the primary form A, B, C, X, A, B, C. So all these complex waves are formed because of the resistance on the left hand side. So if you have many resistance, there's another one, there's another support here. So the price come down first, acknowledge this support level here. Okay, so price went up a bit because some aggressive buyers start coming here instead of waiting for the price to retest somewhere near the top of the consolidation. Price went up a bit, more first buyers start taking profit again, price rolling it down, price will come back down to the second, okay, support level, which is the top of this candle here. And then we form, now we have A, Okay, so A, B, C. Then some trader may decide to buy again, and the price may go up a bit. Okay, and so on. So you may see, for instance, ABC or double zigzag or any other corrective wave. That's the reason why the second wave is sometimes complex or sometimes you see a zigzag pattern is because of the resistance on the left hand side. As the first buyers are taking profit, prior rolling down to the first support level, first and nearest support level, they are very careful. All right, another group of traders that are waiting desperately to buy will also buy, price go up a bit. More first buyers decided to take more profit, price rolling down more, and so on. So you'll see the second wave formed of ABC or double ABC or other area wave, corrective wave. The second wave is a friendly, okay, it's the friendliest wave. Why? It's the friendliest way because, as I explained to you at the beginning of the first video, so the price was going down first because we are in the uptrend in this case. The inverse will be true for bearish, second wave, all right? Pay attention carefully. So I said to you that the pattern is that this price was going down for a long time. There was a bearish trend. Then we have a balanced market. And then sadly, after a few months or few years, okay, as you see here, it was a few years. Okay, it was a long time for this consolidation. Many years, okay? So after a few months, a few years, now we have a first wave, okay? So also you have to understand, I need to mention to trader because I can't wave before for Intel. One wave on one time frame can be divided onto 5, okay? One impulsive wave on one time frame can be divided into 5 subwave on another lower time frame. Remember that. So I'm on a yearly chart, and we have here, I'm talking about first wave like this, all right? Okay, so the pattern that the price went down, then there was a balanced market, and then we see a first wave, all right? You have to understand that the market was bearish first, so we can say that the market is saturated of bearish traders, okay? Saturated of bearish traders because the dominant force was bearish, okay? So there are bears still in the market when the first wave was taking place. These bears do not believe that, okay, the fundamental was solid, that this stock has a high chance to continue the movement on the upside. They will also come as they see the price start rolling it down, they may start selling again. All right, you understand? So they are also selling together with these first buyers in this group, in the second wave. That can force the second wave to cancel sometime, okay, the first wave for no reason. If the fundamentals are solid, if the price is highly discounted, if a bullish market is about to begin, like in 2009, as we see for the S&P 500, and they distort the second wave, it may cancel the first wave for no reason. You have to highlight it if you understand what was taking place and know that it was a distortion, all right? But so we know that there are a lot of bearish traders still in the market, so they start selling also in the second wave, all right? But why the second wave is the friendly wave? Because you have to understand that there were some traders selling at the top of the consolidation before the first wave has started. Some of them will move their stop loss. That's why we say the second wave is the friendliest wave. As they move, suppose you were here selling and you see it going up, you didn't want to come out, and you move your stop loss up to this level where I put my horizontal line, all right? And you say, oops, oh, they couldn't take me off. And now you see the price going down. This is your chance, all right, to come out. So if you were lucky, that's what I said, the second wave is the friendly wave, you were lucky to survive the first wave, and you move your stop loss for no reason, all right? You were stubborn, you didn't want to take a loss or cut your losses, and you were stubborn and you move it here, and the second wave is giving you a chance to bail out. That's why I say that the second wave is the friendliest wave. It allows the stubborn sellers, in the case of the bullish first wave, to come out before it is too late, before the third wave is underway, because the third wave is dynamic, is bullish, and you don't want to be moving your stop loss during the third area wave. The third area wave can wipe out the trading account of many traders that fail to adhere to the 5% money management rules. All right? So that's why we say it's the friendliest wave. All right? So we say that the second wave is also the first profit taking. It's also the friendliest wave. It's also the celebration of the smart money that we're buying during the consolidation period. But also, you have to understand that during the second area wave, there are another group of traders that want to buy. Because now they realize that, okay, in fact, the market was about to go up. Okay, so some of them that were selling here, they closed their trade quickly, or their stop loss were taken out. They say, well, it's going up now. Okay, they lost, so they come out. So now they see the price pulling back, forming the second area wave. Price reaches the first and nearest support level, like here. All right, so it dropped down to the first nearest support level. This trader that lost here will decide to enter the trend instead of waiting patiently for the price to dip below the 50%. All right, the psychological price level of the first wave, and to return back above it patiently and wait for the first high low before the buy. So as the price is pulling back like this, remember, there are other traders buying aggressively again. So they start buying here. Sometimes, because of those kind of aggressive traders, the second wave can mess up the first wave completely, which means instead of waiting patiently for the price to pull back maybe to 61.8 of the first wave, or to go down more to a better support level like this one, some aggressive trader will start loading it here, forcing the price back up here, and you will see more profit taking, and it can mix up, okay, the first wave, or we may end up having a double zigzag or more complex, a second wave. You can see a second wave being a flat correction, which means go above, go above the first wave, only to come back down with an expanded C corrective wave to the downside. All right. So you want to understand that though the price is there is a profit taking, there are other bears that were in the market also coming to sell, and another group of traders that cut their losses start buying straight away. So the second wave can be sometimes very messy. The best thing to do is to be very, very patient. Myself, I would prefer it to dip below the 50%, nicely dip below it, and to see all the volatility settle down and the price return back above, the 50% of the first wave. So you need to understand what is taking place in the second wave, because it's a very crowded period. There is a profit taking. There is one group of traders that were also hoping that the price could does more. So these traders that move their stop loss are hoping that the price come down more, so they may come out at break even or at a smaller loss. All right, you want to watch the psychological price level, the 50% of the first wave. Watch it carefully. In normal condition, we prefer it to go below it before returning above it. All right, if the first wave is not supported by a strong fundamental, if the first wave happen to start from a wrong place, so it's not starting from a value zone, it's not starting from a small median line, it's not starting from below the fair value, the fundamentals were not solid, the company is not going anywhere, but we see a bullish first wave, there's a high chance that the second wave will cancel, okay, the first wave. If there is a distortion, if the first wave is a distortion, the second wave will cancel it. You understand? So you want to check the fundamental, you want to check the economy news. Suppose one stock we see a bullish breakout, everybody talking about Intel, that is bullish, blah, blah, blah. And during the earnings season, here Intel came out and said that, well, we have failed badly to meet the forecast. What will happen? All these bulls that we're buying here will close their trade, which means this is no more profit taking. This is what we call exodus. Everybody running away, so you'll see the price coming down completely, even dipping below the starting point of the first wave, capitulation. All right. So it's not because we see the first wave that we will see another second wave. It's not because we see a bullish first wave in the case of the uptrend that we will definitely see, okay, a perfect second wave. All right. What we have said now is about the uptrend. If you're in a downtrend and we see a perfect first wave, it does not mean that we'll definitely see another second bearish wave. All right. So you want to understand what is taking place during, okay, the second wave. Also, during the second area wave, the small money that we're buying here, they knew where is the value. All right. They know where is the value. Sometimes, if they want to buy more, if all their orders were not filled, they may distort the second wave, which means the second wave will come back completely and cancel the first wave, dipping to touch again the value zone. So if the value, for instance, is at $24 here, they may force the price back to 24. By doing that, because they haven't filled all their orders, that's why it's so important not to go before the smart money. So they will force the price back again to the $24. They will reload it again. All right, a lot of traders that were aggressive buying anyhow will lose, though they were perfectly right to buy, but the smart money didn't finish to load it, so they'll bring it back to the value zone, and the second wave will cancel the first wave. Sometime the smart money will restart again the first wave in an orderly manner, which we start counting the wave again. Sometimes they will not, which means they will distort the second wave only to start the third wave from below here instead of the top of the 50% retracement level of the first wave. So understand what is taking place. It's all about value. It's all about buying low, something that is high quality. All right, so the smart money doesn't care to distort the first wave and bring it back to the value zone and buy it again if they want to buy more. If they discover that in fact this stock is too cheap, there's so much value there, and the company is coming with excellent product, and they will want to buy more, they will force it back down to the same level to buy again. All right, that may create a bit of distortion, and traders that are more experienced will understand what is taking place. The reason why the second wave can be ABC or double zigzag or any other corrective wave is because of the resistance on the left hand side. As the price rolling down, it's acknowledging this level, so you touch it, go up a bit and pull back to the next support level you want to know. I hope I've said enough about the second wave, what is taking place. There's a profit taking, there are aggressive buyers, there are sellers that move their stop loss hoping for the price to come back down. There is another sellers that believe that this first wave is just nonsense, they want to sell more. So this is another reason why we say that the second wave is also the friendliest wave, because these bears that do not believe that this price should go up will start selling here aggressively again. So they play their stop loss here, all right? So the price going down, they are happy, all right? If they don't take their profit quickly before the third Elliott wave is underway, the third Elliott wave will kick them out completely, taking them out of their trade. So this group of sellers also will come in and start selling. All right? I hope you have understand the psychology and what is taking place in the second Elliott wave, okay? And we'll use this information, okay, to apply the wave principle more successfully. Okay, until the next time, enjoy yourself and be very happy. If you like this video, you may share it on social network, Google+, Twitter, Facebook, and so on. Until the next time, enjoy yourself and be very happy. We are the GSTWSYS008 traders. Speak to you soon.